Arguably, one of the best content creators on this platform just announced he'd be selling a 10% stake in his business. But is this offer really a good deal, or is there something we're not seeing? Today, we're looking at disruptTV and the $500,000 deal. Let's start with the pitch. Jack Willmott is the president of Disrupt LLC and makes an interesting case for the video studio. He boasts your investment allows the company to sustain the impressive growth of the channel in order to expand its horizons in terms of both making YouTube videos and fueling its own VOD service, Disrupt Plus. Jack says he needs $500,000 to make this happen. Investors will get a personalized dashboard, monthly shareholder updates, and importantly, a portion of the net income at the end of the year relative to their ownership in the company. It all sounds great, especially if you like taking chances with small businesses. There's the potential of great rewards if it succeeds. But it's a little misleading. The whole premise is built without revealing the actual state of the company, and Jack is outright lying. In his pitch, he doesn't discuss where funds will actually be directed, this along with a generous helping of accounting magic that would make the finance department of Enron blush. So let's dig a little deeper. Let's first examine my claim of lying about where funds will be directed. While in his video, Jack claims that your investment will be used to grow the channel, this can't be further from the truth. In reality, that $500,000 will actually go to buying out the ownership stake of a former partner. Buried deep on the very last page of the financial overview is this little paragraph. Whatever Jack's reason for acquiring his partner's stake is, it outright states all of the money will be used to pay back the channel's former business partner, nothing more. That's a pretty big red flag and tells me I should probably stay as far away from this company as possible. Anytime the leader of any company misleads investors about where funds are going, not only are they lying now, but they'll probably lie in the future as well. And this isn't the only big red flag. Let's talk about the actual equity raise itself. disruptTV decided to use WeFunder to raise the capital for the business. WeFunder is a fantastic platform, and if you've never heard of it, it's exactly how it sounds. It helps companies raise money. In the first section of his WeFunder page, disruptTV announces he wants to raise $500,000 for 10% of the company, valuing the enterprise at $5 million. According to Jack, though, the company is worth $10.7 million, the official number presented on the landing page. Let's do what I do best and look at the numbers to see if the valuation holds up. I'll use Jack's $10.7 million because that's clearly what he feels the company is worth. For the full year 2021, Disrupt brought in a little over $200,000. Initially, this puts the company at a price to sales of 53.5, which would make it one of the highest priced assets on the public market. Inglorious company along with a number of junk biotech stocks. Looking at income after general expenses or net income, Disrupt had $132,000 once all general expenses were paid. If we also subtract all other expenses such as Jack's salary and investment loss, we get free cash flow of just over $15,000. This means disruptTV is valuing its business at almost 700 times free cash flow. That's an absolutely laughable valuation. Even for a business this small, 700 times free cash flow is insane. Now that we know that valuation is useless, let's move on to the balance sheet. And when I initially saw this, I had a glimmer of hope, one that was dashed quite quickly. disruptTV has a cash balance of $15,500, which is great. Always love to see lots of cash on the books. What's interesting though is the $44,800 in short-term investments. This could be inventory or accrued payments, but no. It's crypto. disruptTV holds nearly $45,000 of USDT and USDC on its books. If you want to know why I think it's a bad idea for companies to hold crypto on their books, you can check out my video on Coinbase. In terms of debts, the only one listed is $500,000 in the equity buyout. Interestingly, it's listed as long-term debt, despite the fact that it's not really long-term debt and is actually due real soon. Again, this whole section is a mess. From valuation to the balance sheet, there are a lot of surface-level issues everywhere. But again, that's not everything. Let's talk about the actual ownership stake Disrupt is selling. disruptTV talks about the original structure of the business. Jack got 50% of the business, while Jordan, the former partner, also got 50% of the business. In order to buy out Jordan, Jack needs to put up $500,000. In order to do this, Jack has elected to sell 10% of the company for the same $500,000. With this new structure, Jack would retain 90% of the company while investors only get 10% max for 1/5 of the original deal between Jack and Jordan. Instead of getting 50% of the company for $500,000, which was the original deal, investors now only get 10% of disruptTV for some reason. Essentially, the valuation of the business is whatever Jack decides it to be. Instead of giving investors a square deal or even explaining it, Jack instead went out of his way to inflate the value of Disrupt LLC in order to retain more control of the overall company. With all of this in mind, disruptTV, in my opinion, is utterly uninvestable. It's just not a good investment. From the outright lying regarding transparency around the use of funds, to the insane unsupportable valuations and internal balance sheet risk, no sane investor should even come close to investing in Disrupt as it is. Now, I don't want any of you to take this as an attack on disruptTV. I'll be very clear. I actually love the YouTube channel content. disruptTV is one of the best content creators on the entire platform, and his ambition with the company is truly admirable, but it just can't condone the campaign of what essentially amounts to fraud that Disrupt is engaging in. He's misleading investors, and it's fairly obvious. You can disagree with me, and we can talk about it in the comments if you like, but I wish investors the best and hope no one loses too much money. With all that said, this is Dollars and Cents, and I'll see all of you next time.